This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Lugger Trucks, December 17, 2018. Last week, commodity prices were mostly down, and economic reports were mostly negative. U.S. steel production fell again. Slowing continues as interest rates and nervous markets hurt manufacturing, including steel. Oil fell about $2 a barrel to $51.13 as OPEC and Russia agreed to the major production cuts, and the U.S. changed their position, allowing Iran to sell oil to major countries such as China and India. Therefore, there's a lot of oil out there until OPEC cuts kick in. U.S. oil production fell slightly to 11.6 million barrels a day, just off the recent record. The U.S. imports more crude oil than it exports, but since we also export refined gasoline and diesel fuel, the U.S. just became a net exporter of all fuel, including crude and refined products. And that's for the first time in decades. Iron ore rose 50 cents a ton to $67.50 on softened demand as economies continue to show weakness. Scrap steel #1 heavy melt fell slightly to $3.29 a gross ton on downward pressure in many markets. It's too early to call January prices, but sideways to slightly down is possible. Hot rolled coil steel remained at $1,085, near the multi-year high due to the tariffs. But as the U.S. economy slows, there's downward pressure on those prices. Copper fell and recovered, ending at $2.75 a pound despite China's slowing. China consumes 50% of the world's copper, so we could see more downside. Copper's down about a penny this morning. The 5-year copper chart showed prices remain in a range for about the last 6 months. Global slowing is bringing that downward pressure we just discussed. Aluminum was down 2 cents to 86.8 cents, remaining near the 18-month low on global slowing and nervous markets. November's Chinese industrial production fell to the lowest growth rate in years. China remains the world's second largest economy and produces more than half the world's steel, and as we just said, consumes half the world's copper. This slowing is putting downward pressure on global commodity prices. December's U.S. Manufacturing Purchase Manager Index fell to 53.9, with the slowest expansion in factory activity since November 2017, as new orders and employment rose at a slower pace. Business optimism fell to its lowest level in 26 months as concerns rose on the global economy and rising commodity prices due to tariffs. December's U.S. Composite Purchasing Manager Index also fell, and that's to 53.6, as services fell along with the manufacturing we just talked about. The composite now was the lowest since May of 2017. November's U.S. industrial production rose 0.6% from October as mining output surged, which includes oil and gas extraction. Utilities output rose as well due to the unseasonably cold weather, while manufacturing overall was unchanged. November's U.S. budget deficit at the federal level was $205 billion, the widest budget gap for any November ever. Government spending surged 18.4%. Despite a growth economy with higher profits, incoming revenue to the government fell 1.2%. November's interest expense was $33 billion, about the same as we spend on veterans and transportation combined. The first 2 months of the federal budget year of 2019, which was October and November, the deficit was up 51% from last year. This is a huge problem that will raise interest rates in the future. November's U.S. inflation fell to 2.2%, with lower gasoline prices helping offset higher shelter and used car and truck prices. Excluding food and energy prices, inflation also rose 2.2%. The lower inflation will help reduce upward pressure on interest rates. Wall Street's Dow Jones Industrial Average fell 287 points to 24,101, driven by all the data showing the slowing markets around the world. A record $46 billion was reported as having come out of the stock market in the last reporting week, and a near record $18 billion was pulled from the bond market. Markets do not see an end to the slowing. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week. We'll be taking next week off for the holidays. We'll see you next year.